Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Thursday the 23rd of May 2013. Well, it's all been going on in the Japanese yen. The yen is one of the biggest movers in the G10 space today. It has really clawed back some of those losses from yesterday, and we've seen the overall Japanese asset markets becoming very volatile today. Now the Nikkei, so Japanese stock market, fell more than 7% overnight. It closed down more than 7%, and Japanese bond yields have been rising higher. Now, what has been behind this move? Well, potentially the Nikkei move could have been caused by, number one, the threat of the end of QE in the US, and also no more stimulus from the Bank of Japan. Remember, we heard from the Bank of Japan yesterday. That also put some upward pressure on Japanese bond yields. In fact, the 10-year bond yield actually touched 1% at one time. So that's not a lot in a nominal sense, but it is a huge increase compared to what it was not that long ago. It's actually tripled in value. So it had been down below 0.3% at one point. That's gone higher. The pace of gains have been absolutely outstanding, and that's helped to push up the yen and really weigh on dollar yen. So let's take a quick look at the dollar yen chart here. As you can see, dollar yen really started falling in the Asia session. That also came about because there was some news or some data out showing that Japanese investors had scaled back their buying of foreign bonds, which means that they hadn't sold as much yen, which maybe suggests that they're not into the weak yen theme just now, which could again limit yen weakness from here on. So what we've seen, that sharp decline. Now we did fall below 101 at one point, but since then we have climbed a bit higher. 100.75 does seem to be fairly good support for now. If we do fall any lower, I'm looking at 125. If we get below there, that's a very bearish development for this cross, and I could think the pullback would be more deep. But remember, we do have initial jobless claims coming out today from the US. So US labor market, if that improves, then that could really keep a floor in dollar yen, and we could move higher. Now, obviously, 102, massive level of resistance right now. That had been the base of the shorter term range earlier. And then above there, of course, 103.75. They were the highs yesterday after that Bernanke conference, or testimony, sorry, to Congress. So this really is, the yen is where it's all going on in the FX world today, and that's really weighing on the dollar. But we've actually seen a more broader-based dollar sell-off. Again, remember yesterday we had mixed messages, so we got kind of a neutral stance from the Federal Reserve, and the markets didn't really know how to digest it. Did that mean that they were going to end QE? Is that good enough or should that push the dollar stronger? Or should we be worried about the fact that they're not doing it? They don't seem to be willing they're not dovish enough. So yes, they may keep QE, but they are certainly looking for an exit anyway. So that's had an overall impact on the dollar, and we've seen that with dollar Swissy. Again, another big mover today. Dollar Swissy had pushed as high as 98, really busting some multi-month highs there. But since then, it has really pulled back. It dipped below 97 at one point, leaving 96 as very, very strong support. Now, that's also been replicated in Euro Swissy as well. Remember, Euro Swissy got it to its highest level for over 2 years earlier this week. Well, since then, it's had its biggest one-day decline over the last 24 hours since 2011 as well. So very, very volatile what's going on in the markets, particularly with these safe haven currencies. But again, watch out for initial jobless claims. It's going to be all about economic data now as we move forward, which could make the market slightly more volatile. But watch out for that yen, and do watch out for that 101.25 support level there in dollar yen. Thanks, everyone.